Hi, Jonathan York by Financial Partners, looking at investment markets. Much stronger data coming out of the US on the latest jobs. Market was looking for 150,000 jobs created, came in at 254,000. So that's certainly pretty encouraging for the September report. Also, we saw an upward revision for August and also July as well. So it looks like the Fed are going to be able to engineer that sort of soft landing. Next Fed meeting is in November. Obviously, we've just seen the 50 basis point cut already, and potentially we're looking at another 25 basis points cut in November. But the conflict in the Middle East is seeing US interest rates spike a little bit higher. That 10 years got above 4%, and the 2 years just hovering just below that at 397. 10 years currently 402. Now, if you look back a couple of weeks ago, those interest rates were trading around 25 basis points lower. So does that potentially throw a bit of a spanner in the works for a potential further Fed interest rate cut? Now, just interesting as well, obviously, if interest rates do continue to fall, as the Fed has predicted, there is a wall of cash sitting on the sidelines there, around $6 trillion. Now, obviously, if interest rates start to fall, a substantial portion of that is going to be looking for a fresh home to find some better returns. Getting down to the final home stretch now for the election as well, less than 4 weeks away. And really is still pretty too tight to call. It looks like the Democrats still have a little bit of forward momentum going forward. The biggest issue the Republicans have is trying to keep ex-President Trump on track. He keeps on going off script. So as obviously with tensions in the Middle East sort of rising, sort of flying under the radar, you still got that conflict in Ukraine with the Russian invasion. And that's certainly getting very little news time at present. So oil really has spiked on the increased tensions in the Middle East, currently around 74 bucks and change. And certainly at the moment, Israel seems to have two sort of major conflicts. You've got Gaza, and then also you've got the sort of Lebanon, and that's sort of dragging Iran into the conflict as well. Now in the UK, the government's certainly facing a few sort of teething problems. It's fair to say the honeymoon period is certainly over there. But with the economy showing sort of signs of growth and inflation falling, it's just waiting to see when the Bank of England will cut rates further. Now in the EU region, you've got inflation now below that 2%. The ECB meet again on 17th of October and expected to see a further rate cut then. Now in Australia, you've got falling inflation. The Reserve Bank left rates on hold at the last meeting, and the predictions are that sort of the first sort of rate cut won't come until February 2025. Although we are starting to see a little bit of sort of confidence building in the Australian economy. Business confidence, the latest business confidence survey was showing a small increase. Now in New Zealand, Reserve Bank meets today, 9th of October, and it's just going to be interesting to see what sort of rate cut we see. We should see a 50 basis point cut. Most economists and major banks are sort of predicting that. because certainly the New Zealand economy needs it. The issue is that the inflation data doesn't come out until next week, and that is still above the 2% target for the Reserve Bank. So will they do 50 or 25? And after this meeting, there's just one further meeting, and then the next meeting isn't until February 2025. But what is interesting is that most of the major banks have cut their mortgage rates already. So that should give a boost to the housing market, and also as well give a little bit of boost to sort of consumer confidence out there, with interest rates falling, mortgage rates falling, a little bit more money out there for disposable spending. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.